Hey everybody, Josh Sigurdson, a World Alternative Media here. And of course, we're joined by author and economic analyst here at WAM, John Sneisen. And we are joined by someone I've wanted to talk to for quite some time. Lior Gantz is a serial entrepreneur and editor with Wealth Research Group and a thrill seeker exploring global markets and giving excellent analysis on a multitude of issues. Thank you for joining us.
Hey, thanks for having me.
Now, I wanted to go into a few issues with you today. First of all, the silver markets. The silver markets have been heavily manipulated, like any good market, for years into what I would consider an artificial bear market. But it seems to be attempting to break that trend this past year. Can you go into why silver is so valuable, and do you see it rallying in the next year?
Well, silver is a unique metal because of two things. One, it's the only commodity tracked by a basket of about 30 popular commodities that has not surpassed its 1980 nominal high. It's the only one. All the other commodities in the world have surpassed their 1980 high nominally, and silver is the only one that hasn't reached that number yet. So in terms of how the silver market behaves, it is very unusual. And the reason it's unusual is because it's a quasi combination between industrial and precious metal. When the industrial side of it, which is most of the time what it is used for, the price pressure is down because obviously, if you use silver and you're a miner, you're a producer of silver, you want to produce the lowest cost, highest grade silver, which is going to be used in industries. It has thousands and thousands of uses in all sorts of industries. So that pushes the price down. It pushes it down towards its production level with a bit of a premium for the miners. So since most producers around the world produce it for about $13 to $15, $16 per ounce, there's really no reason for it to be trading at a premium to that above a little margin that miners make. And when it starts trading for a large premium above that, it is because there's investment demand coming in from individuals, because governments and central banks are not accumulating silver. In fact, they're leasing out or selling silver for about 46 years since we went on the dollar patro system. And so you saw in 2011 basically what happens when there's a lot of investment demand from coins and bars, and people don't want to sell their silver. And you saw it's becoming a buyer's market basically, a seller's market where the people that make money are those that held on since it was very, very cheap. So, overall, it's not it's a marriage between that price pressure down from commercial uses and that premium that gets ascribed to it in specific times, at those same specific times that gold rallies hard. So essentially, if you're like me, what I did is take 2 years worth of gold and silver. 2 years worth, meaning 2 years worth of burn rate. So I take my monthly burn rate in cash. How much do I spend on my lifestyle? I took 2 years worth of it. So basically multiplied by 24 and converted that cash in that fiat cash into gold and silver bars, coins, bullion, etc. And I separated it in 5 vaults around the world in different continents. And that's it. I mean, that's my position. I don't do anything with gold and silver except for that. I pay my storage fees, and it's the same as I would pay for any other insurance. It's an insurance. I hope I never use it, and I hope it just sits there collecting dust.
Yeah.
And obviously doesn't doesn't become relevant. If it does become relevant, then we're in a world of shit.
Yeah.
So
Yeah, well, you mentioned something that I think is quite important, Lior, that it's insurance. You know, a lot of people look at silver and gold as, you know, an investment that they can scalp the market. And yeah, sure, if you want to do that, you can. But overall, it's a great wealth insurance, and it has been for centuries. So I see a lot of people, especially with banks like Deutsche Bank, who we've seen heavily trying to manipulate the silver and gold markets over the years. It appears that a lot of the big Wall Street types of banks really want to try and drive the price up and down all over the place in order to make a buck off of something that's wealth insurance. What do you think about that?
well, they've been caught. They've been caught on, doing the act. I mean, they've been sued. So obviously that's going on. The J.P. Morgan leases silver ounces that they don't even own. I mean, they are they're fucking mobsters. But what can you do? I mean, it's it's part of what they do, and they do it very successfully. And if you want to beat them at their own game, you have to outsmart them. So, and they got the governments in their pockets. You saw it in 2008.
Yeah.
If that would have happened in Singapore or in some other country where they have the strictest rules regarding criminal activity, those people will be in jail. In the U.S., they were, they kept their positions. They even gave themselves the bonuses. And, looking back at it 10 years later, the that entire thing happened because on one side you had the financial institutions who did not statistically believe that a countrywide meltdown in the mortgage market was possible because it just didn't happen throughout the 250-year history of the United States. And then on the flip side, you had people taking advantage of low interest rates, very low, credit requirements, etc. So it birthed this huge problem, and then because there was so much leverage, it created a credit crunch. On the flip side, as an investor, if you didn't panic out, I mean, if you held on to your key positions, if they were in good companies, and you added, um, you know, using your cash allocation, you added a lot to your stocks portfolio. You made a fortune. So, in any crisis, it's important to understand that people make mistakes. That's how the markets work, and you have to be the one that takes advantage of these. I mean, there's a social aspect to it. You can get upset, get mad. I mean, you can say, "Oh my God, I can't believe these are criminals that this is going on." But on the flip side, you have to close your eyes at the end of the day and think, "Hey, what have I done for my family today?" And you can't allow these shenanigans to sacrifice your own lifestyle. So, I had a funny story because I was rafting in the Colorado River for 4 days in September of 2008. So I didn't have a signal, and I get back to civilization, and I see my portfolio, and I was like, what the hell is going on? I call my confidants, and like, what happened? Why is Intel sliced in half? I mean, what happened to the chip industry when I was rafting? So I didn't participate in the panic, and it really helped me because I started to consider this as a buying opportunity instead of a panic, instead of a panic attack, and I cashed up as much as I could, and I made a good fortune from it, and I actually opened up a real estate business in 2009 and sold it in 2013 after it expanded to 5 metropolitan areas. So when everyone was going out of the real estate market, I was actually going in while America was on sale. Definitely not where we are today. I mean,
Yeah.
today it's a whole different ballgame, and I think that people should understand that the worst in terms of that financial crisis is behind us. Whether or not there'll be a worse one in the future, that's debatable. But that is that 2008 is in the rear view mirror for sure now.
Well, it's always important, no matter how bad the world is around us, for us to look at what we can do as individuals to sustain ourselves rather than worry
Definitely.
about everything around us. But I wanted to go into the fiat monetary system, which is obviously crumbling at the seams like every centralized fiat system of the past. And while gold and silver may be great wealth insurance, it seems that decentralized cryptocurrencies are really showing a potential in the coming years to make central banking irrelevant. Do you think this is possible?
Well, certainly not in the next few years, but um, if the technology gets better, the adoption gets better, and the free market really wants it so that it is decentralized, because we're talking about money or exchanges or commerce. These are big fundamental things for the human race. It's not going to change from today to tomorrow, but if all of these things happen, then I definitely see a problem for central banks the way that they operate right now. I mean, if you go and ask people, no matter which country they live in, if they're enlightened and they know what central bank is, if they're happy with it, the answer is an overwhelming no. And so obviously there's a need for a change, but if it was that easy, it would already be done. I mean, it took some genius in 2008, which nobody even knows if he exists or not, to come up with this new idea and this new technology. So the world right now in 2018, it has lots and lots of great technology. I mean, we are doing things to nature that 200 years ago were considered to be, magic, impossible. People would blame or praise the gods for what we do and say that this can be done. Yet it is done. The problem right now is not technology. The problem is organization and wisdom. In other words, the right technology in the wrong hands could really set the world back. If the wrong people get, the wrong politicians get too much power and use nuclear weapons, for example, then it's going to be a problem. So the problem is not technology. We have amazing technologies today. I mean, if we organized our planet in the right way, there wouldn't be 3.5 billion people that can't sustain even a nutrition. There wouldn't be 50,000 people dying every day in Africa from lack of food. We have enough food and capability to create food for 50 billion people, not 10 billion people. And so the problem is, one, organization, and two, wisdom. And once we get those two things better, then the technology we already have could have, unleash much more potential. And blockchain, for example, has the potential to create a situation where in these undocumented countries or unbanked countries, all of these people will now have a much better chance in life just by getting their property, just their land on a ledger. They will be able to sell it. I mean, if you go to Africa, if you've ever been, or if you go and you want to buy a pristine piece of beach front property, you want to buy the land and develop a property on it, there's absolutely no way in many countries that you even know who owns it. And even if you do know who owns it, you don't know where it starts, where it ends. I mean, the limits are not clear, and whether or not the government can easily nationalize it or not. I mean, these are problematic areas. And so blockchain is really an important technology for them. And it's obviously important because banks are not built or designed to work with these people that transact in the few dollars a day. I mean, it's impossible for them because the fees are more than the transaction value itself.
Yeah, I think a lot of us got really excited last year. We thought, well, maybe this is a great mass adoption. This is a great awakening. And obviously, there's a big issue with creating that global awakening because, of course, we need a global awakening before we can actually move to that next level with the technology that we have and fill the voids of centralization with, real decentralized alternatives. And I think it's very possible. But of course, we still have a market where 95% of the cryptocurrencies are not, they have no reason to exist. A lot of them, there's like Dentacoin, for example, based on dental hygiene. I have no idea why that keeps getting billions of dollars in market capitalization, but it is. And there's still a few bubbles out there within the crypto sphere that need to pop before we can move on to the next level with that, which is actually fundamentally useful in the market. But John, you had a question for Lior there.
Yeah, let's turn over to the bond markets, because what I've been seeing recently in the bond markets is that the yield curve is starting to flatten. So the difference between the 2 and the 10-year bond, and now it's about 0.5% of a difference, so 50 basis points. What do you see with this flattening of the yield curve as a potential to reach havoc both in bonds and stock markets around the world?
Well, economically speaking, when the yield curve flattens, and I'm not obviously I'm not telling you anything new here. When when they flatten, it means that the market's consensus is that a recession is coming. So whether or not it's going to happen, I do not know. Warren Buffett famously said that any company that employs an economist has one employee too much. So or too many, whatever. But so predicting the future is a very it's worse than geology. You fail less at trying to discover gold than in predicting the future. So instead of predicting the future for 18 years as a full-time investor, what I look at is what I can know, and what I can know is the present. So I deal with more with present facts than with the future, which is unknown. And when you deal with the present, what you're basically trying to figure out in investing is what is priced below its intrinsic value. Now, that shouldn't occur, logically speaking. If you own a property, and if the land itself plus the construction cost for it is, let's say, $100,000, there's literally no reason for you to sell it below that, right?
Yeah,
but it happens all the time because people have other reasons, not logical ones, to sell homes or stocks. People sell homes or stocks for a myriad of reasons, and institutions do the same way as well. It's called forced selling. And when you're forced to sell, it creates distressed valuations.
Yeah.
So if, as an investor, your role is to find those situations. Now, most people do not have either the time, the skill, or the experience to do that. And so 50 years ago, they created a fantastic tool for them, and it's called the index. And if most people just stuck with the index, it would be the greatest financial decision they ever make. If you go back about 50 years and you put $10,000 in the S&P 500, you'd be sitting on $51 million today. So with one decision, no fees, no nothing. So with most people, investing is a 40 to 45 year plan that they should start as early as possible, and they should allow that money to compound. But if you're looking to create a faster scenario with your investing career, which should always be secondary to your career, to your main career, then you need to outperform the index. And to do that, you either need to have, you need to treat this as a profession. And cryptocurrencies right now, for example, are not investments. They're speculations. And if you're able to speculate in the right way, and look, in 2017, Wealth Research Group, it covered Bitcoin at $400. It went to 20,000, right? We interviewed the Dash people at $30 and covered it at 30. It went over like close to $1,000. Ethereum, to my knowledge, we were the first New Zealander in the world to cover at $12. So the thing went up like 90 times fold. You cannot expect these kind of returns to happen every year. In fact, 2017 could have been the best year for cryptocurrencies in general. And now going back to bonds are the benchmark for the rest of the asset universe. So those yields that you can receive on what they like to call the risk-free yield. So the U.S. government will never default because it can print money, and that's why it's called a risk-free yield, though I like to call it a yield-free risk. And when investors look at rising rates, they say to themselves, okay, I can buy this bond, virtually risk nothing, and or buy stocks, or buy real estate, or buy something else. So when rates are rising, what happens is you want to get better prices for stocks. Because if you're going to assume the risk of buying a stock instead of a bond, you want to buy it at a better price. And therefore, investors do not buy every dip. There's not a slew of new buyers for every time the market corrects. And there's a lower floor for stocks. The more the rates go up, the more it makes sense to own bonds over stocks in general. And therefore, with rising rates, you can expect a lower valuation for all the stocks that you own, lower prices for all the stocks that you own in general. Obviously, if a company has a game-changing event, it doesn't move with the rest of the stock universe. A stock market is not really a stock market. It's a market of stocks. So like any other market, you go in and you can find an individual company that has a story that doesn't correlate with the overall market sentiment. But as central banks continue to raise rates, you can expect to see better valuations for stocks in general. How much can they raise? So that is another problem, a huge problem, right? You cannot raise interest rates in an environment such as today like you didn't back in the 70s. In the 70s, the US was the largest creditor nation. It loaned money to other countries. Today, it borrows money. It's the largest debtor nation. You cannot raise the borrowing costs coupled with lower taxes. So you're already stimulating the economy by lowering taxes and letting people spend more discretionary income. You cannot, at the same time, hike interest rates because the government is already receiving less revenue. So something we'll have to give here, but as long as the dollar is the most liquid and usable fiat currency for all of these countries, there is just no other replacement. So that is the double-edged sword with the US dollar. It's just the only game in town. 6 out of every 10 currency units on the planet are US dollars. You just cannot replace that type of dominance that easily.
Well, we have seen quite a few swaps in recent days, usually over sanctions and situations like that, like in Iran, what we've seen in the past in Saudi Arabia, a few other places. But overall, I think that it's quite clear there are telltale risks involved in the markets today. But as you mentioned, to tell the future is quite absurd. I always see people discredit themselves on YouTube and other places saying on this day, this is going to happen. And obviously the fundamentals have been off the table for a long time, and it's impossible to put a date on what's going to happen on that day. It's
just impossible.
Yeah, it's absolutely impossible. It's just better to, make sure that you mitigate risk as much as you can. And unless you're a really big adventurer, like some of us out there, that are okay taking a large portion of risk in order to possibly make major gains. But you just never know. So it's
can I touch upon that? Because it's a very interesting subject. So, okay. The subject is called risk and reward. And the academics would have you believe that the higher the risk you take, the higher the reward. Now, if that was true, then we would just go everyone will just go to where there's higher risk because there's the higher reward. So why not? The higher reward is there. But what would happen is the risk would simply cease to exist there. And you will see low risk, low rewards. In other words, the academics, and these are the same academics that created the efficient market theory, where you can't beat the index, and lots of other surveys. They've been proven wrong, but people just keep going to college and reading 30 and 40-year-old books where there's the proof is in the is in the results. So what you're looking for is low risk, high reward. Now people say that's phantom that can exist. Well, the idea is simple. If you can find companies, assets, doesn't matter what it is. It could be your next chair for your living room. If you can find anything that is trading below or priced below its intrinsic value, as much as possible, you're giving yourself a margin of safety. Now, no one knows the future, like I said, but if you can purchase any asset with such a large degree of discount, you're giving yourself that chance. That is low risk, high reward. These type of scenarios happen every few years. So the problem is that investors, they want to invest now, today. I just funded my brokerage account. What do I buy today, tomorrow? It can't just sit there. They have this disease that they have to be active.
Yeah.
The best investors, they simply do nothing for about 29 days, and then they do something on the 30th day. I mean, investing is just not an everyday occurrence. Most of the time, it's about research and finding opportunities, and actually executing is very rare. I mean, I'll give you an example. In 2009, I saw as shares of Las Vegas Sands, the casino operator, went down from $150 per share to $3 a share. Everyone thought that's it. The gaming industry is over. People don't have money. It's 2008, etc. Started accumulating shares at about $5 for Las Vegas Sands, and bought Las Vegas Sands as my biggest position 2009 for about a few months. That's all I did. You didn't scatter to many other places. Now, 2, 3, 4 years later, it was already at $50. So the idea is that you don't have to run and chase crazy ideas, exotic ideas too much. You need, with about 70 to 80% of your wealth, you need to be involved with cash flowing assets. And with the rest of it, you can play around as much as you want. And sometimes you'll make a fortune. At other times you will lose. And it's just important that you know that what saves you in the long term is being humble. You have to have humility. There are brave investors, and then there are old investors, but there are literally no old brave investors. So make sure that you understand, if longevity is the best thing you can have as an investor. If you can invest for years and years, you will lose that excitement that rookie investors have, and you will only look at companies in a logical way. Not every opportunity will be the greatest opportunity ever, and you'll have a chance to really make a lot of money. And if you don't want to do that, if you don't want to spend hours and hours doing that, just make sure that you look at the S&P 500 once in a while and see if it's trading down for a few percentage points, and just buy some. Every time it dips, just buy some, and over the course of 40, 50 years, you'll make a lot of money. Obviously, pertaining to the fact that you haven't put like $1,000 in there. So American enterprise works. I know a lot of people discount America, say it's plateauing, it's over the edge, it's going to be the Chinese century. Everything is true. I don't disagree with the fact that the U.S. is going to be growing slowly. But, think about a company like McDonald's, for example. 65% of its business is done elsewhere. It's not inside of America. So when you buy an American business, you're not just buying a domestic business. It's important to realize the difference between buying a company that has business around the world and is just incorporated in the U.S., and a business that actually has operations only within the U.S. So then you're restricting your growth only to the U.S. So, that's basically my take on this. It's important to understand that if you really devote time to this, you'll find low risk, high reward opportunities, and don't sell for anything less. Usually, if you sell for anything less, make it something that is mediocre risk, or not high risk, and still a high return. So obviously, not every day you're going to look at a market and say, man, this is an unreal opportunity. I can't believe it's so cheap. It's not going to happen every day. Markets are, have a competitive rush to them. So if something is priced cheap, it tries to immediately become sensible again. So, but it happens once in a while. I'll give you a last example. I know I'm going on and on, but I looked at previous shows that you had, and I know you have a very sophisticated audience. So just want to share this with you. For example, let me throw something at you, which is very understandable. If you take a company, a few years ago, like Intel, when all the newspapers were talking about the end of the PC era, we're not going to have any more PC. Intel's doomed. You're not going to have any more laptops, personal computers. It's all gone. And the market was discounting it very much. It was trading at prices that are, the way you price a bankruptcy court company. And all you needed to do was think for a second and say, okay, can this be exaggerated? And if you have, then you made a fortune with Intel, which is a low risk, high reward opportunity. You could have bought Intel shares at about $15 per share. It's now over 50. Making 300% with this type of company. You got to think also about risk, right? Everyone's a genius in a bull market, but you got to think about the bear market and what's going to happen there. Okay, if you're going to give up all of these gains, so everyone can take more risk in a bull market and make more money, but then you give up more of your gains in the bear market. So it's just important. I am personally becoming very much defensive right now. So I've been aggressive for about 10 years. And it seems to me right now that if something is very overpriced, it's time to sell it. And if possible, it is time to wait out and be more cashed up at this particular juncture.
Yeah, I guess you could say don't invest in the Vancouver real estate market. But obviously, we've seen people like Larry Fink from BlackRock really telling everyone buy in right now, and that always kind of concerns me a little bit when a guy like Larry Fink gets involved and tells everyone now is the time to buy. He said that I think right before the recent dip in the Dow. And but anyway, I wanted to go a little bit off topic, but because you're thrill-seeking entrepreneur, I was wondering what your thoughts are on the heavily dependent public, especially young people, when it comes to being self-sufficient and innovating and competing in the markets. We seem to be seeing a rise of very dependent millennials depending on their parents and, even worse, the government, rather than working hard. Are you concerned that we may be seeing a slow spiral of independence and self-sufficiency in the business world, or is this not all that bad?
It's a good question. Look, in society, there are people that drag society behind, and there are people that take society forward, and we just hope that in aggregate, there are more people driving it forward. So the Western world has made this agreement. Everyone is part of this agreement, yet no one talks about this agreement, but we basically fund the working class, funds the growth for everyone that is born until they're 18. We fund them basically, right, through our taxes, and we do the same thing when you're 65 and above. And so this equation started back in the in the Industrial Revolution. Some politicians figured that that's a great way to get elected. They told people, look, we'll pay for this, we'll pay for that, but they made a good bet. They said when you're 57, we'll start paying, and no one reached that age back then. Mm-hmm. So then they started raising it. It's 59, 61, and it plateaued at 65. But it should be raised. I mean, otherwise governments cannot sustain the amount of people that are aging.
Yeah, I actually want to just cut in for one moment there. I think we were seeing recent studies showing about a $400 trillion shortfall by the year 2050 in pensions. And I mean, people are born in 2007, set to live an average lifespan of 103 years old.
Yeah, and here in Canada, for example, the CPP, which is Canada pension plan, just raise the contributions because they basically don't have enough money. They have a shortfall, and on top of that, they're looking also at several countries to raise it. You were talking about 65. Well, now they're looking at 70 because as you said, they don't have the money.
Yeah, I mean it's a huge problem, but like anything else, it's solvable. I mean, there are many things that you can do to solve this problem. One would be something like some of these American states are doing, where they require you to keep working if you want to be eligible for your Medicare or your Medicaid or your Social Security. So you got to show them a stub like that you're not retired. They want you to keep working, so you keep paying taxes, and obviously then you can be entitled to your checks. But the world has reached this point where there's too many dependents, and whether or not it's an age thing, like I am alluding to, or what you're alluding to, which is a character situation where you have this generation which you think is spoiled. They're being portrayed as spoiled, but they will have to face reality just like anyone else. And the laws of economics don't change. I mean, either their parents will allow them to live with them until they're 40 and finance them, or there needs to be, they need to go out to the world. I mean, there's no other solution. I mean, it's not like somebody's going to invent a new way to live. You create value, you get paid, you save, you invest the capital, and you hope that you do that better than the next guy, so that you'll have an advantage in life and become wealthier. So look, millennials are hitting right now. They're starting to hit their peak earning years. So baby boomers are exiting the workforce, and there's about 6.5 million openings in the US. So this is the largest amount of openings we've ever seen. Millennials are going to have great jobs in the next few years. The problem is that they're not skilled workers. So companies are having to pay overtime to their more experienced people than hire new people that are inexperienced. And that's part of the problem for some of these American companies that are seeing their margins starting to shrink because they have to pay so much overtime. But the millennials, in terms of numbers, they are now bigger than the boomers. And when that happens, when a young generation becomes larger in demographics than an older one, then it's a very good sign for an economy, just because these people will need new cars, they will need new homes, whether or not it will come from cash or from credit. This will boost the economy. So the U.S. in terms of demographic looks very good. So in terms of the private sector and all, exclude the government for a minute out of the equation. The private sector looks very good, but the government looks awful. It's sitting on a mountain of debt, and it's going to have to make a lot of brave choices and hard choices. And in a country that has 326 million people and 450 million guns, I wouldn't want to be the one that has to sit in that office and think of all these things. But I didn't choose to put myself in that in that cesspool called Washington. So I'm very glad that I don't have to think about these things. In terms of what they impact millennials, well, they already created a few fortunes, right? And social media is obviously a millennial-driven phenomena. You got electric vehicles. That's going to be a huge industry. It's going to be this is going to be the greatest trend in the car industry since the horse and buggy was replaced by Ford. So this is huge. And then you got cannabis, which is going to be an amazing industry going forward. It's already starting to kill, not people, but alcohol sales. And it's going to continue to kill alcohol sales because millennials like to sit with their Netflix and consume at home instead of going out to bars and pubs. And obviously with this being recreationally legal in a few months here in Canada and the US and elsewhere, this is going to be a booming industry with lots of high salary, high paying jobs.
It's like the Netflix and chill generation is kind of, growing up there. And you mentioned cannabis, and yeah, absolutely. When you're seeing government commercials on TV constantly telling more focusing on smoking weed and driving rather than drinking and driving, and I'm seeing them every day, every commercial break. It's a new government commercial on why you shouldn't smoke weed and drive. Obviously, that's a market that's going to be huge because they're preparing for it.
I'll tell you this, this is how my partners looks at it, and it's so true. I mean, imagine in 2013 that then Colorado legalized weed, and at the same time, let's say another state, Nevada, it legalized alcohol. In one state, you got less crime, less courts, better employment, better taxes. The other place, everyone has they have to open rehab centers, and there's family violence, etc. So, look, alcohol, which is a million times worse, is legal. Cannabis is very much a substance that, if used in 99% of the occasions, it's going to be used properly and not abused, and you're going to be fine. But you can take water and drink too much water, and you'll have water poisoning. I mean, it's endless.
Yeah.
So, I mean, give me a break. If you are going to consume cannabis, unless you do something, weird, you're gonna survive. It's gonna be fine. You're gonna have a good time, and you're gonna do it again.
I don't smoke this stuff personally, but I do remember.
I don't either. I've never tried it, but it doesn't matter because I can ask people who have, and I can see the commercial.
Absolutely, and that's something I did used to do, and I'll tell you, you just wait for the stop sign to turn green. I mean, as anything, you're driving way under the speed limit. But I'm not gonna advocate that, obviously. But
sure.
I think the solution to all this is just individual responsibility, both for your life, your own life, because we become so dependent on, think that the government is going to take care of us. And also you're talking about individual responsibility with your own money. We have to stop letting the government take care of money and take it back to ourselves. I think everybody would be so much better off if we were able to do our own thing. Yeah, there's risks there. People are going to lose money, but you still you'd be way better off as a society to give that responsibility back to yourself.
Yeah, and we could go on all day. You're very insightful, and I mean, there's a million other conversations that could stem out of that, but we're running out of time. So I wanted to ask you, Lior, where can our viewers find more of your work?
Well, in the end of 2015, I liquidated a fund a boutique fund that I ran, and I said, look, I want to share my research, not with 20 clients, but with whoever wants, and it doesn't matter what your net worth is, etc. And so we launched Wealth Research. Basically, it's a labor of love, and that's where I share everything that I think is important right now in economics. And since I am also an investor, I share specific ideas when it comes to what's going on. So if you go to the website and you click on the top menu, there's a tab that says Special Reports. That's where I aggregated PDF reports in a myriad of subjects over the course of about 10 years, and you can download those. So that's one thing you can do and get some information that way. The best way, obviously, is to follow to be a subscriber to the newsletter, because that's how you stay on top of everything we do. Mm-hmm. And with regards to cannabis, I can tell you that we are going to get involved with the company real soon and start covering it once it launches, that can do business across state borders. So that is something that is very unique. All these companies in the U.S., they have a problem, which is that federally it is illegal to run a cannabis business. So when a company can create a model that is legal, and you can run it through various state lines in the entire country as its market, they have a 52-1 chance to be better and bigger than other companies. And we found such a company, and they're going to IPO very soon. So we're going to be very much involved in the cannabis industry in the future, as we have already in the past. And so this is one thing we focus on a lot. And as I said, in 2017, we had an insane year for cryptocurrencies. I mean, I had some subscribers emailing me crazy returns that they made. And I couldn't be more thrilled for them. But 2018 and what lies beyond, who knows? What we are focusing on definitely is the legalization of cannabis as one of our core themes, because legalization is something that happened only once. And so this move from illegal to legal basically brings all of this money that already exists. You're not creating a market. It's not like it's something that's going to have to be developed. You're just moving all that pie into the hands of private companies or public companies, and it's a guaranteed win. So you just have to find the right opportunities, obviously.
Yeah, absolutely. Well, I really appreciate you joining us today. I hope everyone else checks out Wealth Research Group, and I hope to talk with you again. That's Lior Gantz, Wealth Research Group. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, be the change. Like what you see here, WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized and censored by YouTube as the ADL comes in and flags all of our content as hate speech. Also, check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also find us at steemit.com at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in Steem, the cryptocurrency. And also find us at the Red Pill Expo, which we have a reference link for below in the description and the comments as well. Hosted by G. Edward Griffin, amazing speakers coming out to speak this year. Don't miss it. It's in Spokane, Washington, June 21st to 23rd. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
Wow.